It's about that time of day again. Back in the action once again. Hope you guys had a great day out there. But it's time to get back to work, feet off the desk, close out those chat rooms. We're going to find some setups waiting for tomorrow's trading session. It's time to get to work. It's Tuesday evening. It's July the 20th, 2019. My name is Joseph, by the way. And as always, this is your nightly newsletter. Now, in case you forgot, or if this is your first time here, again, my name is Joseph. My friends call me JJ, by the way. And I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But I have a slightly different job tonight. My job tonight is to identify the best levels of support, the best entry setups to look for, the best targets, the best traps to avoid tomorrow. And we're all getting ready for tomorrow's hump day, Wednesday's trading session. And we have a lot to talk about in tonight's video. We got oil, S&P, Nasdaq, gold, and euro in tonight's video. I'm going to jump in here to oil because although it might not be showing it yet, it looks like oil is setting up for a nice big range-bound scenario as we head into tomorrow's session. We got big news tomorrow, right? Big oil inventory report tomorrow, and we got to get ready on that chart. Let's open the chart here for us tonight here. That black gold, that Texas tea, those crude oil futures. Now, if you missed last night's newsletter, right, we had that big run up, right? That big run up from last night's newsletter. And we say, you know what? Anytime we have a strong move like that in one direction, we almost always get that pullback and a retest of that high. Well, we definitely got the pullback, right, as we were anticipating in last night's newsletter, but you'll notice here we never got a retest of the high. They definitely tried once. They sure as hell tried twice, and it looks like they're struggling to retest that high. That lack of a higher high kind of identifies this as basically being a trading range. That lower high in price pinned up with some higher lows gives me what looks to be like a triangle formation here on oil with this little tiny rectangle right in the middle. Now, we're going to break this down into a very small bite-sized piece in tonight's video, but the bottom line is I am looking for, in a range-bound market, I'm looking to buy off the low, I'm looking to sell off the high, but because of this overall bullishness, I've got to be very careful selling off the high. It'll be different patterns tomorrow to buy off the low that I will be using to sell off that high. We'll also talk about, because we have news coming out tomorrow morning, we'll talk about what a breakout might look like and where some targets will be for breakouts, and obviously for a full-blown reversal if that inventory report goes sour tomorrow. So we get a lot to cover here tonight on oil. We're going to break it all into very easy to digest pieces here in just a moment on tonight's newsletter. Over to the S&P 500. S&P, of course, right, had a range yesterday, as you recall. We got the return back into the range, but boy, something happened here this afternoon, right? And this market was not too happy about something, and now it looks like they're headed back towards that gap fill. So we got the failed gap fill, right, as we talked about in last night's newsletter, and here we are now. It looks like that gap at 28.91.5 is on our radar going lower here for the S&P. We know we're bearish right now. Get a real strong move down, right? That's the most important clue right now on that S&P. That tells me now I want to sell, because I don't want to sell low, right? I want to sell high up here. And I've got my eyes on a very specific area up around that 29.05 area. And I'll tell you, I've got three different entry patterns I'm going to talk about tonight that I'm watching for that sell. We'll also talk about possible range-bound scenario around that gap and how to trade that trading range, fading breakouts, right? Buying low, selling high. So got a lot to cover here on the S&P 500. Nasdaq is, at first glance, very similar to the S&P, but quite a big difference. The Nasdaq, you can see, is also very bearish, right? We had that big, strong run lower here to finish off the session. Started off with that range, right? They got that failure back into the range, but again, like the S&P, this afternoon was not very good for the buyers here, right? As the market collapses back down. So strong move down. Now the S&P has that gap down here. Where's the gap on the Nasdaq? Yeah, we got a ways to go for that gap on the Nasdaq. This level here, though, this level at 76.56 3/4, a very important support level. We're going to talk a lot about that tonight when we dive into this Nasdaq here, that came from earlier this week, and we'll talk about why that level is so important, because it might result in a full-blown reversal going higher. But let's not bank on the reversal just yet, right? Strong bear move down. I want to be a seller, and much like the S&P, I've got 3 specific setups I'm watching for to be a seller. And if we do get the reversal, right, I'll talk about some of the things to look for tomorrow to trade that reversal on the Nasdaq as well. How about some gold? How about some gold here for tonight here? What's up with gold? Well, we definitely did a good job at calling that bottom on gold, but it was a relatively difficult market today, because you'll see it went up and went pretty much straight into that trading range. We're bullish, as you can see. We're into a trading range market. A range-bound market says buy low, sell high, and avoid the middle, right? So I've got my trading range smack in the middle. I'm looking for a buy setup here below that range. Now, range-bound markets, balanced markets, sideways markets, right? These types of markets tell me to look for one very specific setup below that trading range. We'll talk about that tonight on the video. But what if I'm wrong about pulling back? What if it keeps going higher here, right? We know we have that measured move. We have a bunch of big levels overhead to use as targets, right? To see a few there above. So how do we trade a breakout, right? I've got 2 reliable go-to breakout patterns, right, to look for here on the gold tomorrow. So make sure you stay tuned for that here on the gold. And then, of course, how about the euro, right? How about that euro right now? Euro's probably going to be one of the most challenging euro sessions we've had all week tomorrow. Tomorrow could be a pretty challenging session for the euro, and it's all because of this wide range. Now, trading ranges are relatively easy, right? Trading ranges tell me to buy low. They tell me to sell high. But anytime I see a really wide range like this, there's one word that comes to mind, and that is momentum, right? Momentum can help you or it can hurt you if you're not using it the right way. So most important thing right now is I do want to buy low and sell high, preferably selling high here. But this strong move higher right now, this strong move higher tells me this might not be the easiest market to short here. So we'll talk about the best way I see to sell this euro. And I've also got this trend line up here, because that trend line I think could be used for a short covering rally. Is tomorrow the day the dollar drops and the euro spikes? If it is, I'll talk about an easy way to use that trend line to incorporate that 2-try breakout pattern, right? We'll talk more about that here as we go. So euro, gold, Nasdaq, S&P, and we can't forget about that black gold, that crude oil futures. Before we jump into the video tonight, though, you may not be aware of this, right? But before I publish this video on my YouTube channel and send it out to you guys, right, I fire off an email to everybody on my mailing list. That way, everybody on the mailing list gets the first crack at watching this video every evening when it's published on our blog here at Sideways Markets. I want to make sure you get that email. That way you never miss another great newsletter. To do that, all I need is your first name, your real email address, and then hit that subscribe now button. And don't forget, when you subscribe to join the mailing list, your job ain't over yet. You've got to go in and check your email inbox. I'm going to send you a welcome email along with a verification link. I need you to click that verification link to verify your email inbox. And in that welcome email, I've got a bunch of free resources for you that I know you'll love to help giving back as much as I can to help you continue, right, becoming a better trader every day. And a quick warning, sometimes that welcome email gets stuck in your spam folder. So check your spam folder, right? Whenever I talk about day trading, a lot of times it gets stuck in spam. So check your spam. And if you have any trouble with it, guys, don't be afraid to call that toll-free phone number, right? And we'll be here to help you every step of the way. Before we jump in, though, real quick, I need a couple seconds of your time. In the comment section below, I have a question for you. If you could go back and turn back time, if you could go back in a time machine and turn back time, what would you do over in your personal trading career? Now, you might be brand new at this. So if you're brand new to trading business, right, what is it that you wish you knew better how to do? What's the most important thing I can teach you on this? But I know most of you guys, because my stuff is a little bit more advanced, right? I know most of you guys have some trading experience under your belt. Question for you in the comment section below. If you could go back and turn back time and do this over again, what would you do differently? Guys, it would mean the world to me if you spend a couple seconds of your precious time. Give me some feedback, right? Turn back the clock. What would you change about the first 6 months, the first year of your trading career? I know what I would change, but I want to hear what you would change as well, because I'm going to use that information to make this video newsletter the very best it can be every day. And while you're down there in the comment section below, do me a favor, will you? Hit that thumbs up button. Because you'd be amazed, every time you hit that thumbs up button, it helps me expose this video to other traders who we all know can use this information, right? Because as people, as human beings, we're not built to be great traders. Great traders are developed, and we develop it together every evening on this newsletter. So guys, drop me some comments in the comment section below. If you could do over, if you could get a mulligan on your trading career, and then of course, hit that thumbs up button. It really means the world to me when you guys hit that thumbs up button for me. So thank you so much. And don't forget, guys, if the comment section isn't your bag, don't be afraid to call that toll-free phone number in the upper right-hand corner. You know, I'm going to date myself here for a moment, but kids, there was a day when we used to actually talk on the telephone. And believe it or not, those telephones used to have a cord that attached to the wall. Anyways, I'm getting ahead of myself. The bottom line is, I love talking to my clients, right? No, none of this text back and forth, right? Call me in the office. What questions can I help with? Maybe you have questions about best brokers right now, data feeds, charting software that I'm using. Or maybe you want to get access to our free trading classes or join the trade room on a free pass. Call that toll-free phone number, use that live support in the upper right-hand corner, and get in touch with me here in the office. I'll pick up that phone, answer all those questions. I look forward to speaking with you. But first, though, we got some work to do here tonight. You guys didn't come to talk about telephone, right? I know, right? There used to be a telephone attached to the wall, right? Remember the old days? Oh my goodness. Take me back. Anyways, let's get in the time machine again and go back forward now to 2019. We are squeezing out the last few drops of this month of August, and of course, don't forget we got Labor Day weekend right around the corner, right? I'm looking at you, Labor Day weekend. Labor Day weekends when all the kids are back to school, all the beach bums are trying to get all the salt water out of their ear, and everybody gets back to work, and these markets will start to heat up here as we go into the end of the year. Don't forget September, October, November, December, right? January, February, 3 weeks into March. Those are the best times of the year to be a trader. Now we know what we're looking forward to. What's on the schedule for tomorrow? Tomorrow, of course, is August the 21st. It is a Wednesday trading session. So every Wednesday, we usually have the weekly inventory report on crude oil. What do we have for tomorrow? First of all, existing home sales at 10 o'clock Eastern time. Home sales numbers are always important, especially right now, because even though the data doesn't say anything about this, there's a lot of worries about recession, right? Probably not going to happen. Remember, a technical recession is 2 back-to-back quarters, 6 months of contracting GDP. Doesn't look likely right now, right? But everyone seems to be calling for recession, and so that really makes this existing home sales number tomorrow very, very important. We got one more home sales number at 10 o'clock on Friday. So if I had to guess, I would say tomorrow morning, probably the big catalyst tomorrow, the big hoopla is probably going to come around that top of the hour, 10 o'clock, what we call in our trade room, the 10 o'clock shock. Now, that 10 o'clock hour is also very important because after 10 o'clock, we then run into that weekly petroleum status report. This is every Wednesday, 10:30. This will only apply to oil trading. Okay, nothing else, right? So E-minis, gold, euro, nothing else, just oil trading. But remember, after 10 o'clock on a Wednesday until about 10:40 on a Wednesday, oil, it's not impossible to trade, but it usually does get very slow, very choppy between 10 o'clock and 10:40, right? So just be aware of that. I tend to shy away from oil after 10 o'clock. and I'll look for it again after 1040, just because, as I mention every week around this time, right ahead of our Wednesday session, I know it's very tempting to trade the weekly oil report, but here's the problem. Yes, you can make some money on that report, but I have met probably 1,000 people at this point in my career. I've been teaching this stuff almost 15 years now here at School of Trade. And I've met so many people, and you know what the biggest problem is? They lose a bunch of money. It's not the money, it's the confidence. Getting the confidence back. That's the dagger for a new trader. You know, we can make more money, but getting the confidence back is really, really difficult. Those scars that we get from losing a big chunk of money in a short period of time, they are very hard to heal. And tomorrow morning at 10:30, yes, you are going to get a big news report. However, that big news report can make you money, but it can also crush your trade account. And when it crushes your trade account, it's not just the money it takes away from you. It's that confidence, it's that oxygen, and it's very difficult to get back. So I always warn new traders, be very careful trading around news. I understand you can get lucky here and there, but it's difficult to get lucky every single week, right? Let's say you made money on it last week. Will this week be the week that you get that dagger to the heart and you get crushed with some big crippling loss? It could easily happen. I try to stay away from any market moving events that can kill my trade account and in the process rob me of my confidence. So if you want my opinion, my strategy is trade around it, ahead of it and afterwards. Make your money nickels and dimes at a time. Not literally nickels and dimes at a time, right? But I'm not trying to go for $1 million in every trade, right? Make $1,000 every day instead of $1 million today, right? Much more sustainable, much more realistic, instead of trying to gamble on those news events. Right? Take my advice or don't, right? But watch out. If you get one of those big chunks that takes your account out, right, it'll really rob you of that confidence. Then later on tomorrow afternoon, we get the FOMC meeting minutes at 2 o'clock Eastern time. Again, this is another very timely news report tomorrow. Everyone's asking, are the Feds going to cut rates, right? And again, there's no data that supports this, right? But people seem to think, right, with the weird, extra volatile price action this summer, treasury rates going down, right, yields going down, people seem to think a recession is coming. And because of that, the Fed has kind of hinted they're going to keep cutting rates here in the month of September. Everybody will be paying attention tomorrow to those meeting minutes to see if there's more information in there, kind of reading between the lines, so to speak, right? Not what they're saying, what they're not saying, to see if they're getting hints on, right, confirming a rate cut in September. It does look like a rate cut's going to happen in September right now. It all depends on, right, how big that rate cut will be. The markets will definitely be paying attention to that report tomorrow at 2 o'clock Eastern time. So we definitely have two big catalysts tomorrow, one at 10 o'clock and one at 2 o'clock. Again, I do try to stay away from that weekly inventory report because it is so violent, right? So be careful, 10 o'clock to 10:40, I'm sitting on hands. And then don't forget, guys, I'm going to go over the entire strategy tonight. But we're going to trade the strategy tomorrow morning in our trade room because the strategy is very simple, but what's not so simple is actually doing it on a real-time market, right? That's where trading becomes difficult. You can read a book, you can watch a bunch of YouTube videos, but until you actually go out there and do it, right? Trading is a lot like swimming. You can't read a book and become a great swimmer, just so you can't read a book and become a great trader. That's why our trade room is so important for us. So tomorrow morning, 8 o'clock Eastern time, we're going to execute the strategy together. In the meantime, though, let's get these charts all prepped up so you know exactly what we're looking for on Wednesday morning's trading session. Now, of course, we had that big run up, and as I mentioned in the introduction, that failure to retest that high really makes me concerned right now about this being a trading range. I mark up that trend line, I mark up this trend line, I've got this now, what I think to be a triangle style range here as kind of the big macro picture here right now of crude oil. Now, with that said, there's also a smaller range right inside of it. You can see how this mark goes up, back, kind of rotates back inside. So that range, I think that range is the most important part of this chart right now, and then those trend lines are really just kind of the frosting on top to give us some structure to work with back and forth. Now, most important thing whenever you have a trading range is I want to understand, is there any directional bias? There is. You can definitely see the overall bias right now here is bullish. The bears definitely got a strong run down, but they couldn't hold it. They failed and ran right back up with a beautiful example of a failure into pullback combination, which we talk about quite a bit on this video newsletter. So we know the bulls definitely have that edge right now, which is a very, very important piece of this puzzle. What does a range tell me to do? A range tells me to buy low and sell high, right? What does a range tell me to do? A range tells me to buy low and sell high. Now, the problem is I can't just buy low and sell high with the same pattern setups because we're not neutral. We are definitely a little bit bullish right now. If this was a neutral market, right, if there was no clear directional bias, both long-term and short-term, I would say you can use the same patterns on both sides, but because the bulls do have control right now, I've got to give that edge to the buyers. So in other words, I can be a lot more aggressive being a buyer off the low. I've got to be conservative here being a seller off that high. Another thing you want to understand here is once I know I have a range, once I find that range, I use that range to find my buy zones. I use that range to find my sell zones. And you'll learn all the details of doing this right in our video classes here at School of Trade. But for right now, though, just be aware, the range itself is what's used to create those buy and sell zones. So that creates the battle zone as well. And then, of course, in a range, I always want to avoid the middle. So stay out of the middle of that rectangle. Okay, how do we buy low, right? I want to buy low, I want to sell high. If I get a run lower, and again, I'm looking for it in this area here, the lower the better. The lower the better. Because we have an overall bullishness of this market, as the market pulls down, now I can be quite aggressive on that buy going back up. My favorite way to trade a range is to use a failure pattern. And it will look a lot like this one, I would imagine. As we go lower, I anticipate that moving average will come over. The sellers now, of course, will think this market is reversing and bearish. It's not. It's still a range, and we'll talk about when it will be a breakout in a moment. But until it breaks out right completely, I'm going to anticipate that sellers will come in there and they will try to sell off that moving average, just like they did right there earlier on in today's trading session. Now, once they take that sell off the moving average, again, I know this is a range-bound market. Range-bound markets are balanced. There is a big magnet. That's not magnet, Joe. That's magnet. There's a big magnet right back up into that trading range, right? How do we get back into that range? Well, I want to let those sellers try to sell off that pullback. Now I know where their stops are, right? Now I know where their pain starts, right? Now I know where sellers go, whoops, I'm wrong, get me out, and become buyers at this point. So now what I'm going to do is I'm going to look to buy here right now, buy right into those stop losses, just like we saw right back here, right? So failure, you're buying right into those stop losses. Now, at that point, the market almost always pulls back. It almost always pulls back, right? And it will pull back and give us now that pullback setup. And I'll tell you, this is a great example right here because it really shows you in previous lessons here, right? There is a great example right there. So I'm not making this stuff up. You'll see this happen over and over again in range-bound markets, right? Those range-bound markets are very, very typical, right? So again, balanced market. I want to buy low. Moving average comes over. Sellers try to sell off of it. We, of course, now are going to buy on the way up, buy that pullback, right, as it runs. That is what I call a failure into a pullback combination setup. And again, the target will be going back up into that trading range. Now, what if the price tries to go higher, right? Can I sell at that point? You can, but you've got to be more conservative is the word I would use. You've got to give the buyers a little bit more benefit of the doubt. So here's what I want to do. If the market does go higher here, now instead of just using that failure into a pullback combination, right, which we talk about buying off the low, I've got to be a little bit more, a little more patient. I'm going to let the buyers try once, but then I'm going to look for a lower low and try again. Once I can get those buyers now trying once and then trying twice, that's the key. Because we're going against the trend, I have to really, again, I got to give the buyers the benefit of the doubt. They're going to give it a couple swings, right? Look back here, for example, right? Price goes up, it pulls back, buyers try once. Oh, they don't succeed, buy it again, right? That's what I'm trying to avoid. So as we go higher here, right, let them try once, let them try twice, and then I can sell up from there. So lots of examples of, right, of failures during a range-bound market. Now, this particular pattern, I call it a nested failure pattern because there's another failure inside, right, of the previous one. So it's, again, got kind of two failure setups there, right, for those buyers. So that covers the buy side and the sell side of this range. But what does a breakout look like? Right? Because, I mean, in all reality, this is a pretty strong bull run leading into it. And, I mean, let's face it, that's a pretty big move higher, too. So the buyers definitely have some juice at their back right now. Where could they be trying to go? They're trying to go back up and retest that high at 47, right? The nosebleed seats up at 57.47 to 57.27 up top there. So how do they get there? Got to have some strength first. Let's talk about what's the best way to buy a breakout. There are two types of breakout patterns I look for. You ready? One of them, the most conservative, is a 1, 2, 3 breakout. Okay, 1 is a strong move up. 2 is a pullback to a rising moving average. 3 is a strong move off the moving average. Okay, now you'll notice, right, I'm not buying that first pullback. I'm going to wait for that jump off the moving average. Then I'm going to mark up that high. I'm going to mark up that high, mark up that low, the main low down there. That's going to give me what I call my sweet spot, and that is the confluence between the first high and the low of that channel. My target, again, is back up, right, to retest those prior highs. That is the most conservative one, and that's what we'll use if we don't get this one. The more aggressive setup is what we call a 2-try breakout. And I'm going to talk about how this may work on the euro at the end of the video tonight, right? So make sure you stick around in that euro too, because this pattern is something I'm thinking for the euro here for a rally higher. First things first, strong move. That's the most important thing about this potential pattern. It's going to be a very strong move. Now, once we get that strong move, we should see some profit taking and the price will pull back. That's not where I'm buying. I'm going to wait now because sellers will almost always come in and sell that next trap high. Okay, this will look like 1 try, 2 try for the bears. It's really 1 try for profit taking. The second try is actually the sellers coming in, and now that nice strong candlestick, right, to signal me, now I'll be a buyer, again, going up as we go. Now, at that point, right, target again is up at that high. Okay, we called it a 2-try breakout pattern. Now, that will also work to the downside. So if we make a run lower, right, let's say we go lower here, that will also work the same way here, right? 1, 2, 3. Again, strong move down, hold the pullback, mark up that low, mark up that low, mark up that big high, and we're looking to sell right off of that high, that hidden channel high, okay, or that 2-try breakout. Where is my target as we go lower? Nice big target as we go lower here. I would guess it'll be around this 54.22 area, and then it will probably stumble down to that 53.78. But 54.22 is a great happy medium there for you guys for that target to the downside. So that looks great, right? That looks great. Now we have the plan all put together for crude oil. But before I go to the S&P here, I want to give you a deeper dive into all of the patterns that we've talked about. Failure patterns, pullback patterns, nested failures, 1, 2, 3 breakouts. In fact, I want to teach you all of my favorite entry patterns as part of my free trading course. In the upper right-hand corner, I'll put a link up there for you to join our free trading courses. Now that free trading course will teach you all about what I call my 3-step trading strategy. 3 steps to finding the best setups every day in our trade room. You'll also see hundreds of examples of how we use those setups right on our favorite futures markets. I'll also put a big red button here in case you're not on YouTube. You can scroll right down. It's right below the video on our blog. Grab that big red button, join the free trading course, and just like the mailing list, I'm going to email you a welcome email with that free trading course, and I need you to check your email. Sometimes those emails get stuck in your spam filter. So register for that free course. Not to worry, pause the video if you want to. I'll be here when you come back. Right? Not to worry. And again, make sure you get that free course. That way you can learn the same strategy that we're going to talk about every night on this newsletter. Okay, looking at the S&P right now. S&P and Nasdaq are very similar, like always, but there are some key differences here, right, on this S&P. First of all, what do we know about the S&P? Unlike oil, this is a trending environment now. It began the day in that range, right? They got that failure into pullback and back up again, right? So they definitely got that move back up, but it didn't end well. The buyers did not do what they were trying to do. They didn't get back into the top of that range. And again, something happened here this afternoon. I won't bother you with the what, but we know we are going lower here in a bear market. In a trending market, I always want to make sure I follow the trend. I want to make sure I use channels, so I've marked up a couple channels here. I'd like to sell off the top of that channel. We might not get it. It's kind of a wide channel there, which is why I've got this smaller channel on here right now, because that's probably going to be a little more realistic for us to use for that sell. I also like to use measured moves in trending environments. So one big leg down, that becomes the A to B leg, and then of course the C to D leg is that measured move. So it's pretty easy to see that we're sitting right around some support areas down here below the channel. We've also, of course, got this this measured move as well. Most important thing right now is that momentum. Momentum is very, very strong as we jumped off of that moving average recently, right? So momentum is quite bearish right now. And remember, anytime we see a strong move in one direction, what do we look for? We look for a follow-up leg. Anytime we see a strong move in one direction, we look for that follow-up leg in the same direction. And so I'm looking for now is where are some levels of resistance, and what are some patterns I can use to sell off those levels of resistance. Now, this will be very similar to what we talked about on crude oil, because if I can get a pullback here right now, and again, I don't think we're going to get all the way back to the top of this channel. I doubt it, just because it's such a strong move. Usually when a move is this strong like this, it'll pop up and come right back down, right? It probably won't get that big channel like this. We may end up being in a much smaller channel by the end of the session tomorrow afternoon. So we know we get a big bear move down. I'm looking to get a pullback. I've got my eyes on this kind of reversal line here at 29.06 or so, right? You can kind of see there, those wicks there. So that looks to be a good level of resistance to use on that tomorrow. And obviously, if we can get up to that 29.05, that'll put us right above that moving average. Now, at that point, what I'm looking for here is I'm looking for buyers to take the bait and try to buy that pullback. Right? I'm looking for buyers to try to run up. Now, sometimes they get it, right? Sometimes we do run lower. The buyers try, and they are successful. But I'm hoping tomorrow, though, we'll see those buyers fail, and I can sell right into their failure. So imagine that potential setup now, right? Again, running lower, popping higher, profit taking, right? Profit taking here for those bears. And then, of course, buyers confusing this as a reversal. They try to buy off of that low right now. It's not a bull market. Buying this will be a low probability trade, which means I'd rather be on the sell side, selling into that failure, selling that pullback, and that retest of that move lower. So again, there is that, right? There's that failure into pullback combination. And again, you'll see hundreds of examples of these setups, right? And how we apply them to our favorite futures markets on that free course that I mentioned in the upper right-hand corner here. So we know that area overhead. Again, I like to think we get a big move, a big pullback here. And what do we do if we get a big pullback, right? If it does run all the way back to the high of that channel, then what do? We want to see the buyers now. Because it'll be a very strong move, I would look for a buyers once, buyers twice, and then down from there, right? Count this one, right? Go up, right? Buyers once, buyers twice, and then down from there, right? If we were to get a relatively shallow pullback says, I can look for those buyer failures all day long, right? Buyer failure into seller pullback and run back down again. But if it really shoots higher here, all the way to the top of that channel again, which you want to think now is one try, two try, let those again, when momentum shifts like that, give the buyers the benefit of the doubt and let them try a couple times before you go selling into those stop losses. Now, what may happen tomorrow is we may open up here in Asia in a few minutes, shoot lower, and end up going sideways. So what's the plan if the market goes sideways here in the short term? We know we're bearish. How do we trade a range-bound market? We buy low, sell high, right? I want to be a seller, obviously. What's the best pattern for a range-bound market? A two-try failure. Let it go up, one try, pull back, two tries. The trick here is you want to see two clear separate tries and then short that sucker. Make sure you get the proper signal candle, short it now, back down into that trading range. And then at the same time, if we do continue going lower, where's that next big milestone here? Let's look left here. That next big milestone must be a big move lower here. Ah, there we go. So now we know if we do end up running lower, that's an easy one, we're going to end up right back into that range. So that's the target for the sellers, right? So if this thing does, if we keep going here, yep, that 2850 area, that's kind of that's the next big milestone right at that 2850. Now, what would that look like? How on earth would we sell this market when we're sitting at this major support? Got to see some proof first, right? On a range like crude, we looked for proof with that 1, 2, 3 breakout. On a measured move like this, same thing. 1, 2, 3. It's not so important that the first leg is very strong in this situation because we already have that strong move down. But if they can hold a pullback right now, right, and jump off that moving average, well, at that point, the writing is on the wall. The sellers are well in control, and apparently they ain't done yet. So if we do see proof, and again, I'm at a measured move right now, one try, two try. Most of the time, a big measured move like that is going to produce a profit-taking rally, failure, and back down again. If it keeps going, though, well, now we've got reason to believe they're hunting for more. We're going to mark up that low. I'm going to mark up that low. I'm going to go up to that big high up there, right? Create that sweet spot, right? That low to the high of that channel, and we're selling. You got it. We're selling off the top of that channel. Target again is all the way down, right, at that 2850 area, right, for that trading range. Now, how about a bullish reversal? What would a bull reversal look like? A bull reversal, same thing, right? It's a strong move up, it's a pullback to the moving average, and a strong move off the moving average. Okay? Now remember, I'm not going to buy that first pullback because that first pullback oftentimes fails, and we'll sell it right back down again. But if they hold off that pullback, though, I'm going to mark up that high again, mark up that high, mark up that high, mark up that major low. There's that sweet spot. And now where's our target? Yeah, target's back up to retest these highs, 29.35 and change on the S&P for tomorrow. So S&P looks pretty good. Again, as I mentioned earlier, make sure you grab that free course linked up in the upper right-hand corner or that big red button below the video tonight on our trading blog. How about some Nasdaq here? So Nasdaq is, again, as I said in the introduction, Nasdaq is very similar, but it definitely has some big differences to it. The big one being the fact that we know we're bearish, we know we're down around that measured move, but you can see we got quite a ways to go here until we get that gap fill. So a lot of this is very similar to the S&P, but for a little bit different reason. Now again, it's a trending market. So a trending market tells me I want to use channels. What I'll do is I'll adjust this channel now off of that low, up off that high. Yep, and that will give us a nice new bear channel there, right, that we can sell off of, right, that high. And again, I've got this larger channel out here right now. I don't think we're going to get all the way up to it, but hey, I hope we do, because with the right setup, we can get a nice risk-reward ratio off that high, right? I can risk small and get a nice big reward potential on that type of sell-off, that big wide channel. So that would definitely be great. And of course, we'll talk about the pattern we want to use on that. So most importantly right now is we're down around the measured move. We're down on the low of that channel here. I'd like to get a pullback, right? I'd like to get a pullback into some area of resistance, what I think is around that 76.85 area. I want to get that pullback up off that low. Not a huge pullback, right? But enough to make these buyers think that they're going to get a reversal, right? Get those buyers to buy off that moving average. Once I see those buyers, once I see them try to take that long, right, off the moving average, doesn't take much, but once I see those buyers trying to buy off that moving average here, right, now I know where their pain is. Now I know where the pain point is. Now I know where those buyers are going to start waving the white flag and say, get me out, get me out. And how to get out of a long position, you buy your way out, don't you, right? You buy your way out. So if we have buyers buying that counter trend pullback, remember, it's not bullish right now, right? The odds of a rally higher are only about 30%. I'd much rather be on the 70% side of those probabilities, wouldn't you? So that's why I'll look for that sell going right back down to retest that low. It's a failure pattern into a pullback pattern combination, right? A failure into pullback combination coming off that battle zone 85 to that 7,700. Now, as I mentioned in the S&P, right, what if it really does jump and make that run higher? At that point now, right, again, that momentum is very strong. You want to think one, you want to think two, and then sell down from there. Just like this one back here. Big, strong run up. Buyers try once, buyers try twice, then go out, right, and sell right into those stop losses. If we pop higher, one try, two try, sell right back into. Again, this is if they pop all the way back up, right, to the high of that channel. Moving average will come over. Buyers will try once, they'll probably try twice, and then we can sell off that high as well. Now, we're also at a very important area of support down here at 76.56. What exactly is that area of support, might I add? That is the big breakout candle, the breakaway candle at the beginning of the week. Okay, a lot of times what happens is whenever we see a big breakout candle at the beginning of a new week or the beginning of a new day, a lot of times those candles you'll see here, right, they have a gap on them as well, right? But when you see that big breakaway candle like that, that area right there will almost always come back and be used as a level of support, right? So that area right there, it's almost like a mental level, right? When you come out in the morning, right, and I see those breaks, I always mark up those levels because a lot of times they will come right back to it later on in the day. Didn't happen this time, or didn't happen yesterday, didn't happen until the very end of the day today. So it's a major level of support. We are very bearish right now. So what would be a setup I could use to buy off of it? What would be the most reliable way to buy in what really is a very bear market? Again, not usually my cup of tea because it's not usually a great idea to buy in a bear market. I'll talk about what I need to see next to trade it short. But if you want to buy it, look for a reversal pattern, which I call a crown reversal. Crown reversals are pretty simple. I want to see a pullback, first of all. I want to see sellers now try to sell it once, right? Get these bears to try once. Then that try will fail to retest the low, make a new higher high, and you'll see sellers coming in a second time. Now, mark up that low. And that low now is a trap to trigger, again, what I call a crown reversal setup. Got to be careful on these reversals, right? Calling tops and bottoms, right? Well, calling tops and bottoms will have your broker calling you for a margin call. That's what it will, right? Calling tops and bottoms is not a very reliable strategy long term. It's a lot like trading news. You might get lucky every once in a while, but it's difficult to get lucky every day in that casino, right? So calling bottoms, not always going to be a great spot for it. This is the most trustworthy reversal pattern that I use in my trade room. It's called a crown reversal. And again, as we go lower, because these bears have so much effort, so much momentum in their direction, let them try once, let them try twice. And the key is, you want to find a safe place there to buy. You want to buy it as low as you can, right? You don't want to buy it high because that's where the sellers are going to be hanging out. You want to let those bears try once, let them try twice, and then proper signal candle coming off that trap low to rally back higher here. What I'd rather do, though, is see this thing go 1, 2, 3 breakout. Because again, because we know this area here is such a big level of support, 1, 2, 3 breakout, mark up that low, mark up those lows, up off that high, and let's sell it now, right, as it keeps going lower. So I'm trying to stay away from, I'm trying to stay away from selling right into that area right now because I just don't trust it. It's too reliable as an area of support. But again, because we're so bearish right now, you got to look for that crown reversal pattern if you want to be a buyer on it, or again, 1, 2, 3, show me you actually mean it here, bears. Mark that low, mark that low, mark that high, right? Find that new channel and we'll sell off top of that channel. Target is pretty obvious at that point, right? Target is that gap fill at that 76.10. And then again, how do we reverse direction? Crown reversal or 1, 2, 3. Right? If I get a pull back to the moving average and these buyers just blast this thing higher, right? Mark up the high, mark up that high, mark up that low. There's your new channel. And now we're looking to buy off that low. Where's my target? Back up to retest the high at 77.52 and change. Nasdaq's pretty easy here. Just be careful trying to sell too low right now because of that big major support at 56. How about some gold? What's gold up to? Well, we know gold's bullish. Got that big bull run right out the gate here this morning. We talked about that last night on the newsletter. And then it got all chopped up, right? Up into a range here. This is a bull market, right? Bull market tells me I want to be a buyer, but that range tells me I want to buy low, I want to sell high, right? What is a range again? What was the word I described earlier? Ranges are balanced, right? The range itself is the magnet, right? See if I can spell it a little bit better this time, right? That's a magnet. So what I want to do is I want to get down and go back up. I'm not so sure about going up, right, and coming back down unless I get that, right, that nested failure pattern we talked about earlier. I want to avoid the middle, buy low, sell high. And again, if I had a gun to my head and someone said you get to choose buy or sell, I would definitely choose, right, being a buyer right now. So again, stay out of the middle. Buy low. The size of that range helps me find the buy zones below, helps me find the sell zones above. And what I also like about this is I've got that expanding trend line here, right, which is one of my favorite tools for a range-bound market, right? Draw off of those lows, shave off the wicks, get that trend line down there. So keep that, right? Hold that thought, because that trend line is definitely something I'm watching here, because if we can get this pullback, right, get back down to the low of that range, moving average comes over, sellers will try to sell off of it, and we'll look for that buy now going right back up to retest the high. Now, I mentioned earlier that you want to stay out of the middle, right? So stay out of the middle here, right, of this trading range. And that also includes setups, because let's say, for example, we run lower, we get a 2-try failure, and now we're being told to buy right in the middle. See, that's not a very good place to be a trader. Not a very good place to be trading. It's going to be all choppy in there. Okay, look what happened back here, right? There's a similar pattern, 1 try, 2 try, and it tends to fail. Okay, so what you want to do is you want to get further outside of that range, 1 try, 2 try, and buy right there. That's a much better trade. Why? Because that type of trade allows me to risk small to earn large. Whenever you have a small risk compared to a much bigger reward, it's not just good for your trade account, it's actually good for the probabilities of that trade, because a lot more people are going to be taking that trade, because anytime there's a big potential reward, you will attract more traders to it. So most important thing here is if it sharply pulls back and you get the setup right inside of that range, just stay away from it. What you want to do is you want to get it down, get it outside again, right? Get that, ideally, pull back, chop around a little bit, right? Then make the move down to that trend line waiting down below here. Get that moving average coming over. Sellers now will try to sell off of it. I'm going to mark up that, right? Mark up that high. And if we have enough space, it can be that combination, right? A failure into pullback combination. If we have enough room for it, obviously it all depends on how big the breakout is, right? Because we don't want to take the pattern inside of that, right, of that trading range. Now, I should also mention here as well, and we talked about this last night on the newsletter, there is this really wide range long term. So if we get a shallow pullback, it's a 2-try failure, right? Shallow pullback, it's a 2-try failure off that moving average. If this thing sinks like a rock, what you want to do now is use that nested, right? Use that 1, use that 2, make them try twice. All right, guys? So if it really sinks, you know what I mean? If it really tanks, make sure those sellers try twice before we go out and buy it. I like a big pullback because it gives you a nice risk-reward ratio, but the momentum of that move lower is really difficult, right? I don't want to buy right into that bullish, into that bearish momentum. I want to buy after those sellers. Give it a couple tries. Again, give that momentum the benefit of the doubt before you're going right and buying that sucker back up into that range. Now, what if the market runs higher here? Right? What if the market runs higher here? What's the plan to go higher? Well, before you do anything, you've got to know where you're trying to go. Okay, before you do anything, you always got to know where you're trying to go. Measured move up, right? 1 try, 2 legs. That's an easy place to look for a big target here for these buyers, right? That also, of course, lines up right along with some major highs at 28.3, and then probably not tomorrow, but maybe later this week, right? 1538.6. We definitely have plenty of space here right now for this market to run. So if we do try to make that run going higher, doesn't look like the case right now, but we'll see. If we do make that run going higher, what were those 2 patterns talked about earlier? The conservative one, right, was the 1, 2, 3 breakout. The key is that strong move off the moving average. Yep, mark up that high, mark up that high, mark up that low. You got it. And we're buying that pullback, right? Yes, that's called the 1, 2, 3 breakout into a hidden channel pullback. Or what was the one aggressive one? It was the 2-try breakout, right? The strong move up. That one requires some real strength, right, as it goes higher. Again, the first pullback will be buyers taking profit. The second pullback will actually be those sellers. Remember, you want that to be a higher high up there. That creates 1, that creates 2. Now you know where the pain is, and now you can buy right into that pain point with the right signal candle with that target up to that measured move. Ideally, I want that strong move up, 1 try, 2 try, and buying before we get even close to that measured move up there. If it was to make a run and literally knock on the door of that measured move, then you'd want to go the option of a trap, right? That trap. And that reminds me, that is going to be the plan here on that euro if we run higher as well, right? So you'll notice there's a small difference there. If we run out of open space before that measured move, then you want to look for that trap pattern. Trap patterns are very, very common patterns in all types of markets. I cover them in a lot of detail in that free trading course that's linked up in the upper right-hand corner, or that big red button below the video tonight on our trading blog. So make sure you check that out. Now, how does the market turn bearish? Same thing, right? Got to go back down, 1, 2, 3, or strong move back down, 1, 2, 3 breakout in the opposite direction. Looking good on the gold. How about that euro? So euro is going to be the most challenging of these markets, it looks like. And it looks like it's because of that wide trading range. Now, I really battled with this. It looks like there might be a range right there. You can notice that range right there. It's not really that well defined though, so I'm going to go with a wider range here right now with that bear bias. There's no doubt about it. We definitely have a long-term bearish trend on the euro. So, right, try not to get too upset when I mention the fact that we were bullish coming off of that low. I don't want to get you those emails saying, hey, Joe, learn to read a chart. I get it. We are very, right, we are about as bearish gets, right, on this big term of the euro right now. We're very much bearish long term. No doubt about that. But look at how strong this mark came off that low today. Okay, that's a big deal. Okay, because anytime you see that much momentum in one direction, you're going to probably get what? Another leg in the same direction. So, knowing that we have that bullish momentum, how do we sell off the top of this range? We know we're bearish overall. So, I'd like to be a seller up here, right, inside this sell zone. I've got the amount of the move below the range, the amount move above the range. So that's a great level of resistance up there. I want to be a seller. Think of it this way. It all depends on what happens in the short term. One example will be this. If we get this market to continue running higher, that momentum will be very, very bullish. What's the best way to sell a bull market? Look back here, right? We go up. The buyers try once, the buyers try twice, and they fail back down. That's called what? A nested failure, because the market was so bullish at that time. So one try for the bulls, two try for the bulls, sell it back down. But let's say, for example, we sink back into the range now, right? Now momentum cools off a little bit. We're no longer as bullish anymore. And now we jump up. Well, now I'm not so worried about that bullish momentum any longer now. Now as we go higher, I can sell into a buyer failure pattern, right? Straight up, right? Easy. No, well, maybe not easy, but simple setup because there's no momentum there. Okay, so once again, if we continue going higher here without any pullback really, okay, up into that sell zone overhead, do not just sell it because it's too bullish. Let them try once, let them try twice. We are trying to sell the top of the range. We're just not trying to sell it when it hits the top, right? Because a lot of times that momentum will carry it higher, okay? Or maybe it sinks back in and goes sideways here for a bit. At that point, it negates that momentum. And now what I can do is I can sell high, pop up. Buyers try to buy that breakout. They try to buy the pullback, right? And we're selling off those highs. Now, one of the things that's nice about a wide range is you don't have to worry as much about the edges. You just have to avoid the middle. Okay, this is one of the big differences. It's really the best part about a wide range. You know, for example, on the gold, right? See, gold, we go back to gold here. Gold has very little tolerance for trading inside that range, right? There's not much space in there, right? That's like a studio apartment in downtown Manhattan, right? Sharing it with somebody, right? That's how cramped, right, that gold is. That's a difficult range to trade inside. You've really got to make sure on gold you're outside of that range in order to get a good risk to reward ratio, right? So knowing that, look at the euro now. The euro's got what I think to be a pretty big range here. So if we go up, I can sell just off the high. I can still get a relatively good, obviously bigger the better, right? But relatively good risk reward ratio, even if I'm near the highs of that trading range. So that's kind of the good part about a wide trading range. So now you know how to sell off that high. What if we roll back down to that low? It's kind of the same idea, right? If we sit in the middle for a while, then we shoot lower. Yeah, I can use pretty much, right, just a failure pattern back up into that range. But if this market tanks, right, and just runs as we go lower, you're going to want to see that nested. And you can see an example right here. Here's a good example of that, right? We go strong move down, real strong move down. Look what happens. They try once, they try twice, then they get that big rally higher. So again, if it chills out in the middle here, then runs 1, 2, we can buy it back up. Or strong move down, nested, right? Yeah, 1, 2, then buy up from there. Now, I mentioned earlier, maybe tomorrow is the day that this market starts to take off higher, right? Maybe tomorrow's the day the dollar tanks and the euro, by definition, right, is 60% of the dollar. So it's going to have to go higher. So if we do get this run up here, right, if it does just start really rallying higher here. Now, we've talked a lot about these patterns already, but I mentioned earlier I've got that trend line coming over. Right? And I think that trend line is going to be a big part of this. Now, obviously, right, if we go 1, 2, 3, that's a 1, 2, 3 breakout. I'll mark up that high, mark up that high down to that low, right? And we'll buy that low. A good target, though, on that will be that trend line. What I'm talking about here, though, is if this thing just tears going higher, right? If this thing just rolls higher here, what you want to think about is to see that 2-try breakout with a trap. 1 try for the bears, 2 try for the bears, trap low, and in from there. These happen quite a bit, believe it or not, when you've got those. In fact, we saw this last week. What was the market last week? Was it gold last week for that expanding triangle? The inverted triangle last Friday? I can't recall which market it was, right? Sometimes they blend together here over the weekend. But the bottom line is, this is a good example of what could be seen here as an expanding triangle. And that, of course, has so much, or an inverted triangle, as we called it last week, right? Same thing, right? That big momentum push up. So if we do see this thing just run, you know, again, yeah, overnight stuff happens, right? Runs up. 1 try for the bears, 2 try for the bears. I just want a little trap, right? That trap would really be ideal there because you want to buy as low as you can with that trend line being used as your catalyst. Or again, it's that 1, 2, 3 breakout, mark up that high, mark up that low, and we're buying off of that low. The key will be, though, don't get too aggressive buying this market. Right? Fundamentally and technically, this market is extremely bearish right now. So do not try to buy this market unless you get the right setup. And again, be careful about selling this market right now unless it chills out in the middle of this trading range. Great work here on that euro for the potential 2-try breakout pattern. Euro, gold, Nasdaq, S&P, and crude oil. Tomorrow morning is a brand new day. Every day we seem to have a great time in our trade room. And I would love to see you there with me tomorrow morning, 8 o'clock Eastern time. Don't forget, we trade the strategy together every morning because what I found with my clients is it's much easier for you guys to learn this the right way and do it the right way by looking over my shoulder, asking me questions, letting me demonstrate to you the best way to do it on a real-time moving market. We'll do that tomorrow morning, 8 o'clock Eastern time. To get registered, it's very easy. Right below my ugly mug here right now on the video, there's that link for the advanced course. Follow that button. That will give you a full overview of our membership packages here at School of Trade. You can learn all about them. And if you have any questions, don't be afraid to call that toll-free phone number right to the left of me here tonight. Call that phone number, use Skype, use live support, use email, whatever questions you guys have. We're always here standing by. But maybe membership is not for you right now. That's fine by me. We have one of the best free trials in the business. I'm biased, of course, I think. That free trial, though, comes with your free trading course. It comes with our free pass to our trade room, and it comes with hundreds of examples of how we apply these patterns to our favorite futures markets. You'll love that free trading class. Most people tell me the free course completely changes the way they trade for the better, of course, and I hope, you'll like it as much as I enjoyed creating it for you guys. But that's it for me now. Great video tonight, over an hour into the video, so I will say sayonara for tonight. Hope you guys enjoyed the video. Have a great day out there tomorrow. If I don't see you guys tomorrow morning, 8 o'clock Eastern time, Monday through Friday in our trade room. Be back tomorrow night for the next edition of our nightly newsletter. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.